Hey guys, we're going to talk about market psychology. There's a couple things we can talk about when we talk about market psychology. We can talk about, I'm interested in talking about the psychology of the market, which is a crowd behavior. We could talk about personal psychology. That is important, but I might spend a little bit of time on that, but that's not mainly what I wanted to talk about. So, the ability to read market psychology, I think it's an unfair advantage in trading, and it's something that's emotional, intuitive, and developed over time. There are certain things that you can quantify it, but it's behaviors that you notice in other people. And as much as I love automated systems and algo trading are not good at trading market psychology and news. To a degree, it's possible because certain parts of market psychology are quantifiable. But there's a misunderstanding about what AI is from people who are on the outside. Like, if you've played with the LLMs, the large language models, or whatever, ChatGPT, Grok, DeepSeek, there's others, they're like encyclopedias. They're not, and they're really smart because they're so encyclopedic, and they're really good at communicating their encyclopedic knowledge. But a lot of what it is reacting to old stuff and based on pre-existing human knowledge. So they're not necessarily that good at being creative and novel. And they can't, like, I don't really see them news trading anytime soon. It doesn't even seem to me like they're headed that way. They might be, maybe I'm wrong. So I'm going to go over some different points, but one point is, when people are euphoric, they disregard risk. When people are afraid, they want to reduce risk as much as possible. But greed and fear, or euphoria and panic, they're not exact opposites. They behave differently. So tops and bottoms do not look the same. They don't play out the same. And you can't trade them exactly the same. And the indicators aren't just inverted. One thing is, when people are greedy, they can stay greedy for a very long time. And when people are euphoric, they can stay euphoric for a long time. When people are euphoric, they're more likely to speak about it, right? When people are feeling very confident, because it's true that social media is mostly highlights. So you'll see a lot of people talking at market tops. So that is maybe quantifiable if you use some kind of ticker tag or scan. It's not easy to do, but just scan for discussion. It's true that when everybody's talking about it, we're usually close to a top because that's how it works. When people are euphoric and people are up, they want to talk about it. When people have lost money, they want to hide it. And it makes sense. When a dog's injured, the dog hides. When a man loses a bunch of money, he's not on Instagram posting it on his story most of the time, but it's happening. So you do have people posting at bottoms sometimes, or like during crashes, but the real bottoms are usually very quiet. People are not talking about it because everybody's sold out and there's not any euphoria yet. Euphoria comes from unrealized profit. So that said, one of the things that I look for in market tops is everybody talking about it. If people are out in public talking about it, very much so. One of the things that I look for in bottoms is I haven't heard anyone speak on it in ages. These can take a long time to play out. related is how the media talks about things. So it'll be a main news story. Like when Michael Saylor's on the cover of Forbes, that's probably not the bottom, right? It's probably not at the bottom. It's probably at the top. So when crypto's on the news, or when AI is everywhere on financial news, it's a sign. It's a sign that it's kind of played out. So now people are naturally buyers. People are naturally want to be long and are more greedy than they're afraid most of the time. So a lot of the time the tops are more distributive. They retrace a lot. Any kind of sharp move down, people buy. So downtrend, it makes downtrends a lot choppier because of psychology. People are buying the dips. Not a lot of people are shorting or selling the rips. Some people are. But the rallies on assets tend to be a lot straight line up, and the bear markets tend to be very choppy. And it's because of the psychology of people coming in and dollar cost averaging and buying the dips. Now, fear also doesn't last as long as greed. So people panic sell and they wake up hungover and they want to come back in. So a lot of the time the bottoms play out faster than the tops. That's not to say it doesn't take a long time for price to reverse. This isn't always true, but as a generality, price can spend a lot of time on the bottoms, but the day of the bottom or whatever, or sharp moves down, they're more likely to retrace quickly because fear and panic are more fleeting emotions than people have to be greedy to survive, and fearful when appropriate. So as far as how market psychology appears in the charts, one of them is leverage. So when people are in cash, that's an act of protection and fear, because we know inflation and the money supplies gets expanded over time. So to be sitting in cash is a very careful defensive position. To be deployed to the market is neutral, and to be leveraged is greedy. So you can look and you can see what's the margin debt for stocks. How much debt is there in the or leverage in the stock market. With commitment of traders, you can see how much leverage there is in gold. Retail doesn't trade leveraged gold very much, but hedge funds do. You can also look at the crypto market cap open interest and see how much leverage is in crypto. When leverage is very high, that's quantifiable greed and euphoria. When leverage is very low, or there's no leverage, or everybody's short, that's quantifiable fear. So this is where you can possibly use algos to trade sentiment to a degree. But there's timelines and there's news stories. So, I mean, there's buy the rumor, sell the news. Algos aren't great at knowing that, like, the rally that starts with Trump winning the election is going to end the day Trump comes into office. Right? That's like unique human knowledge of timelines. So when we talk about market psychology, there's a lot of little things. There's things people say at tops and bottoms. At tops, the consensus is price will go much further. People say they're not going to sell. At bottoms, people say price is going to go much lower. They're not going to buy. These are predictable things. I don't spend time on Twitter at all anymore, but I like to be plugged in a little bit to discussion, just so I know what the crowd thinks. Because the crowd isn't always wrong, but the crowd is always late. By definition, the crowd can't be early. It's a snowball of people. So for the meat of the moves, a lot of the time, actually, the crowd is correct. They're just wrong at the end. They're late and wrong at the end, the crowd. So, I mean, just because everyone's doing a thing doesn't mean it's wrong yet. It loses momentum eventually. What else can we say on market psychology? Oh yeah, so news. So here's one. Okay. When we talk about news, if there's good news, the market should rally, and if it doesn't, it's a weak market. Like if the market sells off on good news, what's it going to do on bad news? So that's a really, really powerful indicator. You have to interpret what is good news, though, right? Bots can't really do it. Now, similarly, if there's bad news on a market and the market rallies or doesn't sell off, that's very bullish. What's now going to happen if there's good news? But it's hard to define, right? So, like, after Trump came into office, he signed executive orders making a crypto strategic initiative and also a sovereign wealth fund. Both of those things should be extremely bullish for crypto. Bitcoin sold off, did not make a new all-time high. What's going to happen when there's bad news? A couple of weeks later, a month later, there was bad news. What was the bad news? Is Bybit. Bybit got hacked. So, understanding the psychology of news, but again, it's really hard to have an algo or an AI to be like, all right, there's new news on this sovereign wealth fund, interpret it to be bullish, and seeing that the market sold off instead of rallying is bear. And now, right, this is human context. That's not so simple. So I'm here at the farmer's market now. I'm gonna get my food, but just want to share that with you guys. Hope you find it useful, and if you haven't, you should go click the links down below so you can sign up for free demos on my computer trading systems, and there you'll get a link to the Discord, and in the Discord we can talk a bit more. So appreciate you all, much love, and talk to y'all soon. Peace.